What's going on, guys? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell. I really appreciate it. This is Stock Talk Late Night episode 12, and I appreciate everybody tuning in. Everybody's going to come in later on and watch. And just checking out the channel and coming in and fellowship, talking a little bit about stocks, and that's what we do. And I'm not going to hold you up too long tonight. We're gonna get into the little recap of the market, talk a little bit about Robinhood and some dividends we got coming up, and just a couple of plays that I made. Well, maybe one or two leap option plays that I did. That if you've seen some prior videos, that's one of my goals this year is to jump into a couple of leap options. So we'll talk a little bit about that. But if you don't mind, just hitting that like button, that share button as you come in, and we'll jump right in. So let's get into a little recap of the market here. And as you see, we're going to start with the Dow. The Dow was down today 155 points. We were sitting at 42,299.70. Let's see where we at it over the last month, down 2%. Year to date, only down 0.57%, down 244 points. So nothing to brag about, but we are coming to the end of March and we are down year to date. I think that's a little concerning, but over the last year, you see the Dow is up 6% over the last year. But like I said, year to date, you would like to be somewhat in the green by now, really pushing higher. So, but it's still early in the year. We can hit a upward trend or maybe a downward trend. We just have to wait and see. Let's take a look at the S&P down today. 18 points over the last week. The S&P is actually up 1%. Over the last month, down almost 3%, 168 points. And year to date, the S&P is down 3%. We always say you should have some S&P in your portfolio, which I do. I have some S&P in multiple portfolios. Usually the safest play, but so far, we just getting off to a rocky start to 2025. And, a lot of factors can contribute to that. Whether you want to talk about tariffs, the administration, or whatever the case you want to throw out there. We expect the S&P to continuously go up. You have some pullback years, being up over 20% the last 2 years. Was just hoping for a better start to 2025, but right now we're down 3%. And if you're watching this later on or now, let me know what's your favorite S&P position. VOO, SPY, what you have? What else you have out there? SPLG, SPYG. Let me know what's your favorite S&P 500 position that you're investing in. Put it in the chat or put it in the comments. I really appreciate that. But like I said, S&P down 3% so far on the year. Now, heading over to the NASDAQ. The NASDAQ down today 0.53%, down 94 points over the last week. We are actually up 1% on the NASDAQ for the last week. But year to date, we are down 7.80% year to date, down 1,500 points so far year to date. Let's see what's over the last month. Okay, down almost 4% over the last month. But yeah, down 7.8% year to date, 1,500 points. And you see, at one point we were about a month ago in February, we were sitting over 20K, but now we're at 17K. And NASDAQ holds a lot of your big tech plays or positions. They're heavily invested in in technology. So so far, not a good start to 2025 with the NASDAQ. However, Do you guys feel that the Nasdaq has further room to go down, or is this possibly a good entry point? So let me know what's your favorite Nasdaq or tech positions, ETFs, I should say. QQQ, QQQM, XLK. Let me know what's your favorite. Like I said, I have several Nasdaq positions. I have three of those that I just named in separate portfolios. So, along with your Microsoft, Googles, and stuff like that. Um, so I am a investor in the Nasdaq, and I would like the Nasdaq to do well. I understand slight pullbacks. However, we need to get this Nasdaq back on track for sure. The Nasdaq definitely needs to get back on track. What's going on, Lisa? Oh, FXAIX. Yeah, definitely for the S&P. One of my favorites as well. Heavily invested in FXAIX in my 401k. Heavily invested in it. I have a couple of shares outside of it, very small shares outside of it, but my 401k is heavily invested into FXAIX. So QQQM, yep, that's one of my favorites as well. I have a small position in QQQM, but that's one I'm gonna be investing in for a while. I do invest in QQQM weekly, not a lot, but I am investing in it. So, but yeah, so that was just a quick recap of the market. I do want to look at an article that I saw not too long ago. And one of the platforms that I use and I talk about is Robinhood, right? I think Robinhood is great for beginning investors, um, and even seasoned investors. So, I do have a portfolio of Robinhood. I'm actually uh, looking at their trading platform as well, just for charts. And well, no, not just for charts. I just think they're making some improvements on how they do things. So I am using their charting right now as I kind of teach myself or, study the charts a little bit more. So I am playing around with their charts. Had a trade today that if I was patient on, I would have done well on that trade. Actually, you know what? While we're talking about it, while we're talking about Robinhood, let me just take a look here and just see how that trade went. If I would have just been a little bit patient, and let's see here. Let me share my screen. And I'm not a big trader. I consider myself a beginning trader. I'm more of a long-term investor, but one of my goals is to get better at trading, and I'm not going to stop until I get to where I need to be. So let me see here. See what we got here. Okay, here we go. Here is a Robinhood chart, and this is for the SPY. And just to show you, I had some levels here during the day, and I had a put set up. I think when I caught it, it was about right here. No, it was about during this candle here. I put in a put, and this is a 30-minute chart on the SPY, and I got out, or I was a little nervous. I saw the pattern of the S&P going down, but I probably should have waited to this green candle form up here and then got in here. But I think I got in around here at the bottom of this red candle, and I think the green candle here knocked me out. Or no, I didn't even have a stop loss. I just got out. I was just a little nervous about it, so I just went ahead and got out and took a small loss. However, if I would have stuck to the chart and to my gut feeling, I would have been able to ride this candle down on that put play for the SPY. And, even though I got out and I took a loss on this candle here, it was pretty refreshing to see. If I just used a little bit more patience, I would have definitely done well on that SPY put. And if I had caught it right here where I should have, I think I was working at the time, so I didn't get a chance to catch it up here. But if I would have caught it right here, exactly where I had my level set, we would have done really well on that put. So even though I took a loss today, to me it was a win because it was a learning experience, and I think it's going to help me down the road, as I get better at charting. So yep. So I didn't have a stop loss, but I got out. So, but if I would have held longer, that play would have been a winner for me. So the reason I didn't have a stop loss because I'm still kind of shaky on the moo stop losses. I put this trade in on moo, and for some reason the stop loss didn't go in for me. I think I was trying to do a trailing stop or something like that, so it didn't go in. So I had to watch it and kind of just watch it manually. So I did get out of it. Like I said, I did get out of it a little bit early here, but my thought process was correct, and it's still, that put would have even though I got in late, that put still would have been a winner for me if I had stayed. So just a learning experience. Didn't lose but a couple of dollars, so I'm not upset about it. I'm more actually kind of happy that it did go the way I thought it was going to go. I just have to know on the 30-minute charts, just be a little bit more patient, stick to your guns, and it'll work out for me. So that was just a learning experience, and I'm okay with that. I'm all about learning experience. So while we are here, I did do a leap option the other day. Let me see if I can get back to my regular. Okay, go back to the Robinhood Classic. So I mentioned that I wanted to do some leap options in Robinhood, and I did. So I was able to catch. I actually sold some profit here from my ET portfolio. Sold some shares. I think it was about 9 or 10 shares, probably about 9 shares. I was able to buy a share back. But I just took some profits from the ET position and took out a call, a little bit out of the money, but this is a call for 2027, May 2027, $20 call. ET is currently trading at $18.98. It was at $20 earlier this year. So I'm kind of following the Wall Street Trapper method for this call. Wait for a pullback, and then I think he said 20% pullback and do a call 10% away from that price, something like that. But that's kind of the method that I'm doing. So I did a $20 call for ET for May 2027. So now I just got to use my patience, let it play out. I think ET is going to go back to $20 before the year is out, and then we still have until 2027. So that is my first leap option of the year. I want to get 2 to 3 leap option plays before the year is out. So we got one. I'm gonna have to be patient. I know it's gonna be some volatility, but I've been patient with the stock. So now I have to be patient with the actual play. And this is where I tend to struggle a little bit. I had some plays last year that I didn't let play out, that I should have let play out, especially in the energy sector. And those ended up running, taking off. But I had got out on some pullbacks. And I have to remember these are leap options. These are not, same day expirations or week expirations or 2-week expirations. So this is a test for myself just to see how, I can operate during these times. So 2 different things here, doing some leap options and learning day trading. So that's kind of, it messes with your brain a little bit, knowing that I'm a long-term investor. So just something that got to put in the time, got to put in the work in. So, but we're going to do that. But that's our first leap option play of the year. It's ET. We're still looking to do 2 to 3 more leap options before the year is out. They don't have to be 2027 plays. They can be 2026, 6-7 months out, 2025. So we're just going to keep our eyes open. If we see an opportunity, we're going to do it. We took some profit from our ET position, and opened up an ET call. And we're still trying to we're still going to get to 100 shares of ET. So we're still going to work on that. So now instead of the 82, 83 shares we had, we're down to 74. Going to take a little bit out of my dividend income as well, but that's okay. That's okay. So, but yeah, let me get off of this for a second. I want to touch on another little topic here. And we was in Robinhood, but I also saw a Robinhood article that I want to read. I thought it was pretty interesting. So, and just to show you, and I talk about Robinhood a lot, even though most of my investing is done at Fidelity, but I think Robinhood is on the up and up. And as you see here, this is from Yahoo Finance. It's from Yahoo Finance. It says Robinhood is taking on Bank of America, Citigroup, and JP Morgan. So Robinhood CEO Vlad Tenev said a decision to offer home delivery for cash had to do with ATM crime. So let's take a look at this article here. Just read a little bit. It says Robinhood is going after the big banks and their ATMs for deposits. The trading platform turned quasi bank and wealth manager unveiled 2 new products that will compete for business with America's largest legacy banks, including JP Morgan, Citigroup, and Bank of America. The article states that Robinhood Banking will provide access to traditional checking and savings accounts with an annual percentage yield of 4%, provided one is a member of the platform's Gold service. FDIC insurance is on offer from Robinhood's tie-up with Coastal Community Bank. So I do have a Robinhood account, as you just seen. I do not have the Robinhood Gold service. I believe there's a small monthly fee for that service. So I don't have that, but I do have a Robinhood account that I am active with and I do use. So just continuing on here. Furthermore, the company is promising to deliver cash to your door through an app similar to Uber's if you are a banking customer. So yeah, that's going to be a little different, a little tricky. Anxious to see how that plays out. Also states that Robinhood co-founder and CEO Vlad Tenev told Yahoo Finance that the company wants to be a one-stop destination for people to manage their wealth. He added that there is a demand for home cash delivery as people try to avoid various ATM crimes, especially in San Francisco. Instead, a person's cash will show up at their house in a large, nondescript envelope. What do you think about that? I think that's a little risky, right? You know, we have the Amazon porch pirates already. So just think about having cash delivered to your door. I don't know how that's going to work. You know, like I said, I don't use Robinhood for my banking purposes, but I do use them for, some investing things. I think that's going to be a little sticky situation if people are trying to use Robinhood for, like a cash delivery. So good luck with that. It's going to be some crazy things going on with that. But I like how Robinhood is kind of taking steps to being a one-stop shop for your financial purposes, financial needs. So I think Robinhood is on the up and up. And, they take a lot of flack for some things, in the investing world and investing space, but I think that they will do well in the long run. So I'm looking forward to continuing my, investing with Robinhood. So that's my take on it. And just to switch gears a little bit. And let me see here. So a very important day is coming up. Very important day. March 31st is the payout day for one of the more popular ETFs by the symbol of SCHD. SCHD is one of the most talked about dividend ETFs. I see it every day online, Twitter, Instagram, everywhere. People talk about, hey, you need to buy more SCHD. Stock up on SCHD. It's one of the best dividend ETFs. So March 31st is the first quarter dividend payout for SCHD. I do own SCHD. I just added up my shares, including my son's shares. I have 130.962 shares. And if we go over to Yahoo Finance here, I think I have it up. And we go to SCHD. You see SCHD will have a payout of 0.25. So that's 25-cent dividend. So I just said I had 130.962 shares. Multiply that by 25 cents. That's going to be a payout of $32.74 in that range there. So a nice payout. I think the last dividend paid a little bit more. Let's take a look here. Last payout, if they have it. Okay, we had a 0.27. So that's 27-cent dividend. But let's take a look. If you want to do a comparison, 25 cents this time. Let's go to the first quarter of last year. So we're going to scroll down here. Oh, I got to go back further. Okay, let's hit this button here. Nope, that's not going to take me back further. Okay, I think I'm on a year here. Hold on, let's see. Let's go over here. And let's go start date. Let's go back to March 1st. And let's do that. So let's go back, scroll down, see if we can find that first quarter dividend from last year, which was, oh, I don't see it. Okay. I don't see it there. Let's do something else. Let's go to dividends only. Let's go back even further. Do 5 years on that. And okay, so the first dividend wasn't paid out till June last year. Okay, that's kind of strange. It was 27 cents. But you see the upward track in dividend payouts from SCHD dating back to September 2020, from 18 with 17, 23, 23, 20, 22, 25, 27, 27, 25. So I do like overall, that's over $1 payout, over the last 4 payments. So I'm not mad at that at all. The SCHD known to hold his share price actually go up. I'm up pretty nice on my overall portfolio. So I don't have to worry about a decay in share price when I'm dealing with SCHD. So one of my favorite ETFs, along with JEPQ. I like JEPQ a little bit more, but I am heavily invested in SCHD, and I'm going to keep investing in SCHD. So, but yeah, what we at? We at the 23-minute mark. Like I said, this video is not going to be long. They actually have March Madness on, and I'm just, my Duke team is playing right now. So I just want to cover a few topics here. We talked about the market recap. We got into Robinhood a little bit. We talked about my leap option plays and SCHD payout. I think that's all I had on my list for tonight. Not really watching any particular stocks right now. I did do a couple of covered calls over the last week or so. Amazon, Apple, which is, that brought in some more income for me. So I was able to pick up some more shares of Google. When Google pulled back, I bought some Amazon when it pulled back, bought some Apple when it pulled back. So just that cover call income has been doing really well for me. And it doesn't have to be a lot, right? I've been getting about from $80 to $100 a week, sometimes even more, from three cover calls, three cover calls that I do, usually 2, because the Google's not every week, but I'm usually able to hit an Apple or Amazon every week to do some to get some cover call income. So that's been working out really well for me. It allows me to pick up more positions in that particular portfolio, and that's an IRA portfolio. So, I'm able to, without even contributing, I'm able to earn income and add positions to my IRA portfolio without really making contributions. But that's just the beauty of cover call income. So that's kind of something that I know I have in my back pocket just in case something happens with Social Security down the line. Who knows? But to be able to use that cover call income to increase my positions, it's a good thing. So I think I'm almost at. I haven't given an Apple update in a while. I think I'm still just shy of 101 shares of Apple, but I'm getting close to 101 shares just from constantly buying little bits and pieces here and there from the cover call income that I'm able to earn. So I don't necessarily have to contribute from my normal income to that particular portfolio because I can use my cover call income to build up that portfolio, and I can use my other income to help some of my other portfolios out. So I wish I was able to sell cover calls in all my portfolios, but I just had to build up those positions to get 100 shares and just hope that whatever share that whatever position that is, they're able to have the premium for it to make sense to sell cover calls. But with companies like Apple, Amazon, Google, they're always moving. The premiums are always pretty good, so you just got to catch them on a good day. I've learned to wait for those green days to look for my cover call opportunities because remember, you don't want the cover calls to go, you don't want it to go past your strike price. So I'll wait for a green day to look for a cover call opportunity that's going to give me the best premium. Pick a safe premium. I know there's probably going to be some pullback during that time, and it's been working out for me. So it took me about a year and some change to kind of learn that, but I've got a nice little system down packed. So to me, that's easy weekly income that I'm earning in that particular IRA account to help build up that position and help build up shares even when the market's been in the pullback. So that's just another skill set to have. So that's why I'm heavy on cover calls. I'm big on dividends. Tomorrow's going to be a good dividend day for me. My weekly paying dividends are going to hit. I think I have a yield max NVDY that's going to hit. I just had FEPI hit, was a monthly paying dividend, FEPI. I just had PFFA hit the other day, which is a monthly paying ETF. I'm on track to beat my March 2024 dividend income, which is good. I'm still a little bit less than what I want to do for the year, so I'm running behind on that, but that's okay. I kind of expected it with the downturn in the market, but we're still ahead of schedule from last year. So we earned over $8,000 in dividend income last year in 2024. I have a goal of $12,000 this year. Maybe not going to hit 12, but I think we're going to get past the 8 that we had last year, and that's still a good sign. So if we're on track, ahead of schedule from last year, that's a good sign. So might not hit 12 this year. Maybe we can hit 10 or 9. Anything better than what we did last year is positive and a step in the right direction. So we got the dividend income, got cover call income. We just put in our first leap option play of the year. We're looking to do 2 or 3 more leap options, and we're looking at the SPY every day, just studying the SPY, studying the charts, and we're going to work on our I won't call it day trading. Well, it is kind of day trading, working on seeing if we can find some good plays, a couple times throughout the week to take advantage of the market, especially with these big swings in the market. So what's going on, Tom? So yeah, that's the play. That's the play. Just keep stacking, keep building, and just finding ways to take advantage of this market. There's many different ways you can make money in the market, even when the stock market is not going in your direction. So even with the dividend income, the payouts may not be as high as I want them to be right now because of the direction of the market. But what we're able to do is reinvest those dividends, gain more shares. So when the market is ready to go back to the green, whatever it does, we've already stacked up on shares, and we're going to go even higher than what we were before. So, it's all a play. Just got to use a little patience, a little, a little game planning, and just make it work. So it's going to work out. So, but yeah, man, I think that's pretty much what I had on my list today. Trying to see what's the play for next week. Got the beginning of the month. Brings in dividend income from like Divo, DIVO. I know my JEPQ plays are right around the corner. JEPQ, like I said, one of my favorite ETFs, so we should be getting that dividend income probably probably end of next week or beginning of the week after of April. So yeah, the yield maxes are doing well. The weekly pans are doing well. I picked up some gold and silver plays that's been doing well, even when the market's going down. I got those in my ETF portfolio. Was it GLD, I believe, and SLV. So even when my other ETFs were going down in that portfolio, I think I'm up like 4% on silver and 6% on gold in that portfolio. So it's been offsetting some of those losses I've taken. So just a small adjustment I did in that portfolio. So I think I have about I can pull it up right now. This is the ETF portfolio. I've done a few videos on them a while back, but I did make some adjustments in that portfolio. Let me see if I can pull them up just to see what I currently have. I'm just pulling up my Fidelity account on the side here, just to see what I have in that in that ETF portfolio, which is I have SLV, which is iShares Silver. I have GLD, which is gold. I have SPYI. I have SPYG. I have XLK. I have BITO. So right now I'm down overall in the portfolio. I'm down 3%, but the SLV is up 6%. My GLD is up 4.57%. So something to build on. I would be down even further if I still had those other ETFs in the portfolio. But this is my all ETF portfolio that I think I'm just going to ride on out and just keep building up over time. And it's doing pretty good for me right now. I know it's down a little bit overall, 3%, but like I said, I'm able to add on those positions while they're down. And the main reason it's down because I do have BITO, which is the Bitcoin ETF, and we know how Bitcoin's been going. So I think I'm down like 11% on that. But I'm able to add now while it's down. And BITO also is a monthly dividend payer. So and it pays quite well, actually. So this is a good time for me to reinvest those dividends and add some more on top of that to just strengthen up the base of the portfolio. XLK, we talked about how the NASDAQ being down. So XLK, I'm down 4% on, but it gives me an opportunity to add to that XLK because I believe in the NASDAQ long term, and I know the NASDAQ is going to turn around. SPYG, SPYI, those are S&P positions. SPYI pays every month a nice dividend. SPYG, like I said, it's the S&P growth position. So I really, really like this portfolio long term. One of my smaller portfolios, I've had it open, I think, about a year now. And, we've made some adjustments. We started off with about 9 or 10 positions, 8 or 9 positions. Now we down to a strong 6. And we're just going to keep rolling with this 6, build it up. And, once that market turns around, we're going to be ready to go. So, and let's see here. What my man's talking about here. I don't know what he's talking about, but yeah, man, doing quite well. So, but anything else? I think we're about to shut this thing down. Anything on you guys' watch list that we should be keeping an eye on while this market is in a little downturn? If so, let me know. drop them in the chat, in the comments. I appreciate it. I can look. I definitely look at all the comments. So, but that's a little update on where I'm at right now and what we got going on. Appreciate you guys tuning in. I'm gonna have to do a little better on Tuesdays. I just be so burnt out on Tuesdays that a lot of other stuff going on, but I gotta do better just staying consistent with these videos. So, but I think we're gonna wrap it up for the night. We've been on for about 35 minutes, man. Remember to like, share, subscribe, hit that notification bell. I really appreciate it. Leave some comments even after the video is over. Neil, I'm catching FOMO not having enough money to average down into my position. Yeah. That's yeah. It's hard to and sometimes it's hard to scrape up that extra money to invest. But that's why the cover call income has been so important for me, because even when I have other stuff going on, I have some bills that got to be paid, I'm not able to invest as aggressively as I would like to. The cover call income has been saving me. It's been helping me out. That's just another way to earn some extra money to average down into those positions. Google especially. Google is down to the 160s right now. I think that's crazy. You know what I mean? So, but I've been able to add some money to it, not a lot, but that's just with the help of that cover call income. So yeah, I understand that. I understand. We all have some things that come up, have some bills we got to take care of, or some emergencies that go on. And you may not want to invest as aggressively. I'm actually don't invest as aggressively as I used to, as I was when I was actually building up my portfolios, because I was just at a time where I could put a whole bunch of cash in it. But things happen, and you have to make some adjustments in your finances. That's why it's so important to have, financial literacy, because you're going to have some bumps in the road where you got to make some adjustments. So that's just a part of life. And once things get back on that up and up, and you can go more towards that investing, you'll see that difference. You'll see that difference in the portfolio. You just don't ever want to be in a position where you can't invest in anything, because that's going to suck, especially in the time right now where you could be building up those positions. So, but yeah. Nice stuff. Good stuff. So, but yeah, I'm going to shut it down for the night. Hope you guys have a good weekend. Let's see how the market does tomorrow. And, I'm going to do better. I'm going to try to do something this weekend, get a video out this weekend. If not, catch me Tuesday night. I'm going to try to stick to my word for Tuesday. Hopefully work doesn't bear me down. But I think we're going to shut it down for the night. I will talk to you guys later.